Hey everybody, how's it going? It's your buddy Uncle Bruce here. I decided to make a quick video today. It is Friday, August the 5th. I want to talk about AMC and I want to talk about the fact that last night they came up with their quarterly financials and they announced a 24 cent a share loss, which is a penny worse than expected. And then they announced a special dividend for all existing shareholders. And I want to show you something that blows my mind. Okay, let's see if I can make this work right here. Hang on just one sec and we'll see what's going on. If Jennifer wants to stop doing that, I don't know what's going on with Jennifer. Hang on, let's see what's going on here. I want to go to this picture right here. I want you to see this, okay? Notice I have written up here on this board there are 516 million shares outstanding right now on AMC. They're going to dividend 516 million more shares in the form of a special preferred share, dividend share. That means it will be outstanding 1,032,000,000 shares outstanding when we're all said and done. This is happening in the next 2 weeks. The stock right now on AMC, as I am talking to you here at 1:30 Eastern time, 1:30 Eastern time, is trading at unbelievably 21.28. It's at 21.28. This thing is up right now, 267 a share. Okay. It was this morning as low as $16.50, and that was off. I don't know, $2 or something like that. Anyway, it is now here, 21.28. Now there are going to be the president of the company has come out and said without any reservation at all, he has said that they want to issue 516 million shares. For every share you got, you're going to get a preferred dividend stock, and they're going to trade on the open market. And they're calling this a 2-for-1 stock split. Well, a 2-for-1 stock split means that your stock that's trading out now at 21 is going to trade at half that much after the split is over. Keep in mind that a week and a half ago or so, roughly, these shares of AMC were trading at $10 to $12 a piece. And right now they're at 21.28. I mean, they've already gone up $8, $9 just in anticipation of the announcement of the earnings and everything else. We are in for a world of hurt here. I think there are opportunities out there for you to make some serious money on this stuff. And I generally do not recommend to do this. But I'm telling you today, this might not be a bad idea. It might behoove you to consider buying some puts on AMC. But you better buy some puts that are good for at least a couple of months. You don't want to buy a couple of weeks out. You want to go a couple of months out. It's absolutely critical you do that. Taking a look at my big ass iPad, which is right here, just so you know, we're looking at puts, for example, into September, just as a first month idea here, if it'll work for me. You might need to look at September puts, something along the lines of, oh boy, we are into something here. This is unbelievable to me. The stock right now is 21.35 as I speak. Just notice how it's changing already from that board up there. If you want to buy at the money put contracts, you're looking at about 21.50s, $21 put. So $21 put will run about 3.25 to 365 at this moment in time. The higher the shares go, the lower the price of the put. The lower the shares go, the higher the price of the put. If these shares are going to go down to, say, if the common shares are going to go to 12 and the preferred shares are going to go to 12, that's $24, right? The stock right now is 21.24. So just a $12 price on these commons. Your puts will be worth they'll be $21 put, $12 price, $9 book value, and they're at 365. I think you can make a bunch of money on this. I don't recommend it, generally speaking, but it's something to think about. There will be no adjustments to the contracts of these shares because we're not the company's not issuing new common shares. They're issuing a separate set of shares called preferred shares. And so these contracts will not change. But the pricing of the stock, I think, will plummet. I think that 516 million plus another 516 million, these two shares may eventually trade at the same price. And if that means 21.28 divided by 2, that means that these commons are going to go down to half this price. 11, what is it, 1060 or something like that. At 1060, a $21 put contract is worth over $10 a piece book value, and you can get into it between 325 and 365. You want to pay a little less money and go a little further out, you can buy 20s that are out of the money right now, 275 to 297, roughly somewhere in there. Again, 20s will be worth almost $10 a piece if I'm right on this readjustment of value. If I'm really right on this, because the company will now have issued 1,032,000,000 total shares outstanding, with preferred shares having higher rights than the common shares, because preferred shares are a higher class of stock. To me, the least thing that's going to happen is the stock's going to divide into two halves in value. So the preferreds will trade at 10 something and the commons will trade something based on this price, 10 something. But they want to pay down debt. So they're going to have to issue more stock from their treasury, and they can issue stock of these preferreds. They can't issue any more commons, but they can issue preferreds. And if they issue preferreds, let's say 100 million shares at $10 a share, that would be a $20 price because it's 10 each in value kind of thing. But if they issued these at $10 a piece, they would bring in 10 million, 100 million, $200 million. Am I getting my numbers right? Bear with me, folks. They're bringing in maybe $2 billion. You're talking about massive dilution that's coming here. Massive. They have over 5 billion in debt, far as I already know. 5.3 billion in debt right now. They can reduce it by half. They'd have to issue enough stock to get $2.5 billion. $2.5 billion at $10 a share is 250 million shares. That would put out then 1.28 billion shares. There's no way this is going to be trading at these prices. There's no way it's going to be trading at $15 a share combined. No way. The two combined will trade at about $12, 11, $13. These comments are going to take a dump. This is going to be an unbelievable bloodbath. Why people are buying this stock right now on the open market at 21.35 is completely beyond any reason whatsoever. There has to be dilution. There will be dilution. And I just can't see the preferreds going out at a ridiculous price. Why would anyone want to buy stock in AMC in any class, and now be involved in a company that has over 1.2, 1.3 billion shares outstanding, and they still would have billions in debt to go? I fail to see the payoff. This move here is fantasy land, absolute hopes, dreams, aspirations, and fantasy land, and I just don't see this coming through. Now, the Wall Street bets crowd will probably say, well, Bruce, you got to remember, by issuing these preferreds, they're going to catch the short traders short-handed. They're going to catch these guys with a short squeeze, and they won't be able to, cover their shorts. And I'm thinking, no, I don't think so. With 500 plus million shares outstanding, short sellers will always be able to get stock to short stock. They'll start shorting the preferred stock, and that stuff goes for a ride. They're going to short it. I can't see both shares trading at $20 a share. That would put the company at $40 a share book value times a billion shares out, roughly. It's a $40 billion company. This is not a $40 billion company, no matter what. I could maybe see them trading between $6 and $8 a share each. That would justify $12 to $16 a share trading range for the stock before they issue paper. So if they're going to issue paper, which is preferred paper, they're going to be issuing that at between $6 and $8 a share. And you want to raise $2.5 billion at $6 a share, 400 million shares you're going to have to sell. That means there's going to be 1.43 billion out there. You want to pay off the whole debt at $6 a share, 900 million shares will be issued after commissions. 1.9 billion, let's call it 2 billion shares outstanding, versus right now 516 million outstanding. They're going to quadruple the number of shares outstanding to get rid of all the debt. In theory, how can the stock be trading at 21 bucks a share? You're going to have 400% dilution. This stock is headed for $5 a share or less. Sure, by the time it's $5 a share, all in, they have no debt. Great. Okay, then whatever money they're generating doesn't have to go to the bankers and all that stuff. But now you want to justify what your stock is trading at going forward. You got 4 billion shares outstanding, and you want to trade at you want the stock to trade at, say, $10 a share. You got to have 20 times earnings. So that means 50 cents a share earning. You have to have 50 cents a share earning. That means you have to make 2 billion in profit. This company's never made 2 billion in profit, ever. And right now they're losing 500 million a year. So I'm kind of going, I don't know where this is coming from. Kids, I tell you right now, it is unbelievable. Here's that board again. Take a look at it here. AMC, 516 million out now. 516 million going to be issued out shortly for 1 billion shares total. 500 million in common stock, 500 million in preferred stock. The stock's trading at 21.28 right now. Ridiculous. I think we could see 4 times as many shares out when it's all said and done to get rid of the debt. To manage half of it, you're going to have to issue, oh boy, I might have to issue a billion more. I don't see how this can work. I sure I'd love to know what the mentality is on the 269 gain right now, but I just have a feeling what it really is: wishful thinking, rampant speculation, small investors catching a hot stock right now. They're all jumping in for the party. They're all jumping in for the action. But I have a feeling that there's going to be a sad ending when it's all said and done, and I wonder this might not end too well. That's my thought. Join me at 2:30 today. 3 o'clock Eastern time today for the final hour of trading. We'll talk about this and everything else, and we'll see what happens. Thanks for joining me. We'll talk to you later. Bye for now.